Hey everyone, thanks for checking out my course on trading altcoins and cryptocurrencies. Um, Before we get into the course itself, I wanted to take a bit of time to explain who I am and where I come from in my walk of life and why this course was created. So I never thought I'd be a day trader. I actually went to university for 9 years to become an architect. So I have a master's in architecture. I have uh, a Bachelor of Fine Arts in New Media Engineering. So I have a computer science background as well as an architecture background. So day trading was not something I had intended doing. I think the allure of day trading came to me when I was in university. I played poker online to pay for my tuition, and the the thing that I loved about poker was the analytical side of things. It was the analyzing of hands and cards, and the challenge of beating somebody else on the other side of the cards. There, you have your own whole cards, and the idea of playing a game and beating somebody else is very alluring to me, right? Kind of that gamer's mentality, very competitive nature. So from there, I ended up not playing poker because Black Friday happened. And for those of you who don't know, Black Friday happened, I believe it was back in November of 2011. The FBI or whichever authorities was that shut down all the poker sites basically seized online poker. So all the poker sites were seized. Therefore, lots of us who are playing poker were forced to move on. Some of us moved on to playing poker at a different scale, and some of us dropped the game completely. I was one of the people that dropped the game completely. For me, it was time to move on. I was in university anyways. I was many years into my studies of becoming an architect. Becoming an architect and getting a master's in architecture is a pretty long venture. So my walk of life was never intended to become a day trader. And the reason I'm saying this is because I know a lot of people, day trading is either something they want to get into or something that's new to them, or something they quite haven't been able to say, I'm in one profession, but I want to make a switch to another. Maybe I'm in sales, or maybe I'm an architect, or maybe I'm an engineer, or maybe I'm in financing, or maybe I work at McDonald's. It doesn't matter what walk of life you're from. If you have an interest in day trading, this is the course for you, and this is a good starting point. So that's a bit about me, myself, and where I come into day trading. Now, why did I create this course, and why did I want to take on this venture to train other people? I spent many years learning how to trade. I spent many thousands of dollars buying books, reading materials. The student in me, naturally, after 9 years of university, you kind of get this knack for reading material and going through material and chewing through knowledge, and you go on this path of wanting to consume as much as you can and learn as much as you can. So for me, it was, thousands of dollars and years of training and books and studying and the refining of skills, things I've learned along the way, like discipline from poker and analytics, math, being able to read situations and analyze things in great depth. So I've seen it all my life, kind of. People, they want to learn how to trade, and they go through this process of starting and failing and trying and failing and trying and succeeding and then succeeding and failing, and it becomes this roller coaster of what am I doing right? What am I doing wrong? And it's a tough thing to make a career out of. Day trading is not an easy thing to make a career out of because it takes a lot of time, a lot of effort, a lot of study, and I have a real problem with the material that's out there in the world to train traders. I often see online in person. I meet traders all the time. I've attended seminars. I've done the whole nine, and I always see the same kind of hook and spiel, as they say. Learn my strategy. It's done me so well, and I've taught tens of thousands of people to make millions of dollars with this strategy. But really, it's all kind of it's not real. It's somebody trying to, if somebody were making millions and millions of dollars trading, they wouldn't share their secrets to the world. They wouldn't expose all these great forms and tactics that they use to make all this great money. So a lot of it is, and I've seen this for many years, 5, 6, 7 years now. People I know, when they go and they spend $5,000 and $10,000 on training courses online, or they sign up for these mentorships from people who promise to give them this great method, some Fibonacci pivot method that was created by somebody else, or some reshape of material that's already accessible out there, or one specific strategy, when really day trading is very specific to a set of fundamentals. You guys can study these on your own time. I won't dive into them because I could spend hours talking about them, but there's Dow theory, there's Wyckoff theory, and there's some things that I'm going to be breaking down throughout this course, and giving you guys kind of the takeaways from it, because you can spend years reading about this stuff and learning about this stuff, but the takeaways are the important parts. And I'm not saying don't go learn about them. I'm saying use my years of knowledge and experience and my many years of reading to kind of streamline some of this material for you, and don't become a victim to the trap of buying trading materials for thousands of dollars and signing up for these courses that really are just the reshaping and the rehashing of other material, and something that may or may not have worked for somebody. There is no set strategies. There's a right way to trade and there's a wrong way to trade. Now there's strategies that work, of course. There's always going to be strategies that work in trading, but you can't build a career off trading. So that's a bit about why I created this course, and who I am, and kind of if this is for you or not. So this is going to be the fundamentals. Now, this is going to be the first part of the course, and this is mainly going to be focused on just going over a few basic concepts that I want people to really understand, grasp, and make sure you guys are applying these things before we get into charting and technical analysis, and how real supports are created, and what it means to gain support versus losing support, and what it means when you fail to gain a high, and how that affects a move. And before we get into that, there's a set of foundation that I need everybody to follow and understand. So to start, who is this course for? Beginners. If you're a beginner in day trading, no problem. This is going to create a great foundation. As this course is created, it's created hierarchically. As to beginner's course first, we're going to go through all that material, then I'm going to get into more advanced, and then I'm going to get into the really heavy, deep stuff. So it's going to go in a chronological order where beginners are going to be able to follow from the very first course all the way to the end. There's about, I think the list is up to 44 different videos now of things I'm going to be talking about, and I won't get into what they are right now, with the exception of they are 44 different topics. So each video will, you'll probably want to watch it a few times, study it, understand it, ask questions, yada yada, etc. Pros: if you're a pro, if you're already day trading, it's going to help you refine your skills. It's going to help you properly identify levels, entries, this, that, everything else. This is not just for beginners. It is very advanced knowledge as we go. It is everything I know on trading, and I've been day trading for a long time, very successfully. So, and I focus mostly on cryptocurrencies and specifically altcoins. Bitcoin, I do trade Bitcoin as well, but I have a passion and a love for trading altcoins. So that's really who this who this would be targeted towards, is people who love trading cryptocurrencies, but day traders in general. This is theories and knowledge that is usable and applicable across every market, because trading is not specific to one market or another. Okay, the fundamentals of trading. Getting started on the very basics of trading. The idea, and again, this is only to bring ideas to your guys' mind, so that you understand this is some of the stuff we're going to be talking about. But I want everybody to focus on a couple key theories, I guess it would be, before we get into lesson 2, 3, 4, 5. So the fundamentals of trading: accumulation, distribution. In trading, there is periods. There's a period of accumulation, which people are buying a coin with a target in mind, right? So that's before a price would move up. People are accumulating the coin, right? Or accumulating the stock or the asset or the wealth or whatever, however you want to refer to it as. There's an accumulation period, a distribution period, right? And another accumulation and a distribution. So accumulation and distribution are targets of each other, right? I'm going to go to this here. Going to look at a trade, and we'll get into that a bit later. But just to briefly go over accumulation and distribution. The idea of accumulation and distribution is simple. This ends up being an accumulation zone. Now, why is this an accumulation zone right here? This is an accumulation zone because people are looking to buy here for whatever reason with a target of selling either here or here, right? So accumulation and distribution becomes the theory of accumulating a coin with the idea, and I'm just going to refer to it as a coin, asset pool, stock, Bitcoin, whatever you want to call it. I'm just going to refer to it as a coin. Okay, so accumulation. People are buying in this level with the idea of selling here or here. They have a target in mind. So this is what's called the accumulation period. So after a coin distributes, you enter accumulation, and when a coin accumulates, people are doing that for distribution purposes. Okay, so if you were to jump into this trade right here, and we're going to keep this very basic for now, this would be an accumulation period. When you're buying here, you have a target. You're saying, I have a distribution target of maybe here because of some level in the past. Maybe this was the level, right? And then that would be a level. But just you know, for quick reference, I'm buying in this area here because I know this level is going to be tested, and I'm going to distribute at that level. Now, in this case, this move wasn't done. This was the accumulation down here, right? And I'm going to mark accumulation as yellow for this purpose and distribution as red. So I need to back it up a few more steps here, right? So accumulation is yellow, distribution is going to be red. So we distribute here, oops. We distribute here, right? We reaccumulate, no, that's not what I want to do. We reaccumulate in the short right here, right? And then we redistribute right here. So this is the idea of accumulation and distribution. Every stock goes through this cycle of accumulation and distribution. And what happens after accumulation? Distribution. And what happens after distribution? Accumulation. So it's a cycle, right? You have moves, accumulation, and distribution. So that's the third piece of this, is the move, right? So in purple, I'm going to show the move. Okay, good. Right, this is a down, this is, oh, there we go. This is the move down, right? This is the move up, right? Accumulation, move up, distribution. Move down, accumulation, move up, distribution. Move down, this would be accumulation right here, right? You move up, this would be distribution. So distribution and accumulation has periods and phases it goes into. When something is accumulating, people are accumulating a coin for a reason. They're accumulating a coin because they have a target. Now in this case, you know, we're just going to draw just quickly some levels that I'm noticing. That would be a level. Let's go to the weekly here to see maybe there's a clear identification of levels. I'm just doing this on the fly to see where the levels are. That would be a level right there. Right, so not getting too much into why these are levels, but because this is a swing high on the weekly, that was a weekly target. So you know, ultimately this move ending here would have been trying to fixate on a weekly target. So accumulation and distribution, the idea of buying a coin and why moves happen and why they exist. Okay, so that's accumulation and distribution. Okay, trends, accumulation and distribution, just to finalize on that, accumulation and distribution, we will go over that in depth, but just for now, I want everybody to realize that this is a very important theory to understand in all trading. So whenever you guys look at trades, get into the habit of identifying accumulation and distribution periods, because accumulation has a target, which is distribution. Accumulation has a move, which is a move up into distribution. Distribution then has a target of reaccumulation, right? I'm going to leave it at that before it gets too advanced and we have to start going into different things. Trends. Trends is another very important thing in trading, in day trading and stock trading. And trends, the idea of a trend is, bring this back up. The idea of a trend is some reason or a pattern that something happens for a reason. A price moves either in a parabolic motion, and parabolic meaning like a mirror, so it has a down move followed by an up move, or it has a valley that's created, some type of trend. Now this was IOTA recently in a trade that I made, and IOTA's trend here was this swing high. No, let's go to the 4-hour level and do this. Actually, it's more relevant on the 4-hour level. This swing high to this swing high here created a trend. Okay, so now in this trend, the reason why trends are so important is because it kind of dictates the entirety of the move. In this trend here, we have this starting here, and you can see this kind of motion where it comes up to test trend, comes down, comes back up, bounces off, comes back up here, bounces again here, comes here, does this, tries to break it, and you'll notice something interesting. When this trend breaks, it actually tests a moving average level. This is an MA level, so if I were to turn this off, this is the moving average on a 26-day period. Now we'll get into that later, but the idea of this trend is that it is in this move and it's testing trend, right? So you can see this whole pattern here is a trend, right? You can see this whole pattern here ends up becoming this trend, right? Becoming a squeeze or a trend or something that gets respected between levels until for one reason or another it breaks out up or down. It breaks a trend, it does this, it does that. People know them as wedges, ascending, descending wedges, bull flags, bear flags, whatever you want to call them. The idea is that trends are a huge cornerstone of trading. And it gets very advanced, right? Trends become not just let's draw a wedge and see what happens. There's a reason why everything happens in a trend, all the way up from every touch and what it means when you get a wick that breaks through a trend to touch an MA, and how many times it does it. The first time it does it, they call that first touch. The second time it does it, it's called first test. So there's a reason why something happens on a first touch versus a first test versus a second test. So without getting too deep into trends, trends are, for the purpose of the first video here, trends are another cornerstone of your foundation of trading. Next one being levels, the fundamentals of trading. Another thing, the three fundamentals in my opinion: accumulation and distribution, trends, and levels. And levels we're not going to get into at all, other than they are support and resistance, and everybody knows what that is. And I'm going to have probably about 5 or 6 different videos on levels, all the way from beginner levels to advanced. Levels is one of those things that it gets so deep. Everything from how many times a level gets touched, if it's the first time, if it's the second time, what it means if a level gets wicked, when is it gained and lost, what it means to gain support versus losing support. You can have a level, right? You can have, let's simplify this. Let's take that away. Let's take that away. And just to quickly go over this for those of you who are a little more advanced and kind of want an understanding of what this is going to be about. Let's just call this level, this swing high, we're just going to call this resistance for simplicity's sake for now, even though it has different reasons for everything, right? And this would be the bottom channel of that level, right? There's a reason why this happens here, which would be considered first touch. And going forward in this move, what does that mean for the rest of the move? When it establishes first touch, what does that mean for first test, right? So when this comes up to test this for the first time, what does that mean, right? Same with this thing, creating first touch here. Just to give you guys a piece of trading, advice here. A first touch like this is going to get rejected 90% of the time. So often in trading, you're going to see a level established followed by first touch, right? And then this here followed by first touch and first test, and so on and so forth. So there's probably going to be about 5 or 6 videos on levels and why they do what they do. And I'm going to leave it at that for now because levels get quite advanced. So that's going to be the fundamentals of trading, the things I want you guys to start wrapping your minds around, focusing on levels, trends, accumulation, distribution, just the things that I want you to be aware of going into these videos. This right here, let's put this in red, how important it is, or red's not noticeable enough. Let's go green. Green's good. So this is the fundamentals of trading. This is the foundation of why we trade and how we see trades. And yeah. Next, what type of trader are you? Are you a swing trader, scalp trader, or are you a long trader? There's 2 different types of traders. Both have different methodologies. They both follow the same principles and ideas, but identifying what type of trader you are. Are you a swing scalp trader? So are you the kind of person that enjoys that 15-minute rush because you see something and you like to be in and out of a trade? Or do you like to sit in a long-term trade, buy one coin at a level and wait a week, 2 weeks, 3 weeks, a month, 4 days? 4 days might be a long trade for you, right? So knowing what type of trader you are is important. So identify that to yourself. That's something I can't answer, tell you, you're going to be this or that, or which is better or worse. It's whatever works for you. But identify what works for you so that we can build that strategy around you. Because I'll be touching on both of these and the different situations in which swing and scalp trader may want to take certain approaches and a long trader. So the only thing I want you to do is identify what type you like to be. Myself, I'm both. So in my opinion, having a blending of both of these styles is more beneficial, because if this is 50% of the trades on the market and this is another 50% of the trades on the market, why not expose yourself to 100%? So I'll leave it at that. Ditch the indicators for now. Really important thing I want to touch on is indicators. I want you guys to use no indicators. In my professional trading career, the only indicators I use on my charts are moving averages and very rarely volume weighted average price, so VWAP. Moving averages are really the only indicators I use. Indicators will not tell you how to trade. Bollinger Bands, KC, whatever, MACD, volume. For now, I want you to ditch the indicators. It happens too often when people use indicators and they try one strategy because they read an article about it online and it says, trade MACD like this when it crosses this level to this level because it's creating some type of divergence. And while those things can be true, a large amount of the time, more often than not, people, they try these indicators, they fail them for whatever reason, they lose money, they scratch their head and say, man, why did I lose money on that trade? This indicator, I did it right. And then they go and they ditch that indicator and read a new article that was released 5 days ago because it's newer, or it has more votes or whatever, and they say, well, this indicator is great because you can do this with it. And that indicator trading, all those indicators are data that has been averaged over samples of time. Data can't tell you what a move is going to do. Data can only tell you the history of what that coin has done. It can't tell you what it's going to do in the future, and it can't give you indications and tip-offs of what's going to happen next. Levels do that, trends do that, and accumulation and distribution do that. Data does not. What has happened in the past has nothing to do with what a coin is going to do in the future, with the exception of trends. I'm not talking about trends. You have a valley created here and you have a valley target close. For you advanced traders who are thinking, oh, data can tell you things, you're right, it can. But indicators I'm not a fan of indicators. I have traded very successfully for a long time without the use of them. I don't believe in them, and I believe in levels and I believe in targets, and I'm going to leave it at that. Just like everything else, we're going to put that behind us. I want you guys to ditch the indicators for now. In the advanced courses, I will get into 1 or 2 indicators that can be useful. One of them being volume. And the reason volume can be useful is it can tell you what's happening during the move. They call it volume climax. Climax in trading can tell you where a move is going and when it's done. MACD can show you divergence, and volume can show you what's called climax. And we'll dive into those. And moving averages can show you levels, but you're not buying and exiting coins based on moving averages. So moving averages really can't tell you what a good buy is. If you're buying based on moving averages, you're buying too late and you're selling too early. Let's put it that way. The truth about news. A lot of traders I've met in my life want to trade news, and they've got all these apps open, and they've got their desktop filled with Blockfolio and all these different things, and they want to chase the news. So anytime a news article comes out, they're buying in hopes that it moves up or down, and they get burned a lot of the time. News does not affect the trajectory of a coin. I'll give you an example. Ripple took a massive spike up from, I think it was around 4,000 sats all the way up to, I believe it was 12,000. It could have been 20. I think it was 12,000 sats it moved up. Yeah, it was 12,000. You need to understand something. Ripple was in heavy accumulation, and I'm going to bring the Ripple chart up for this example because I want to, oh, it was already up. Okay, that's okay. We'll just leave it up then. Ripple BTC. Let's go just Binance. Okay, sure, first one. Okay, I've got some levels here, not important. You know what I'm going to do? I'm going to clear my Ripple chart here. I can always do this later, right? Before this kind of insane move up that Ripple took here, all the way from 4,000 sats, and even if we just go and draw some basic levels, you wouldn't have traded the news on this. You wouldn't have said, okay, let's trade the news because the news made us move up. No, the level made you move up. And not just the level, but we're on a weekly chart right now. So this is, the last form of distribution happened here. This was the first, okay, let's redo that without the magnet tool. And let's move this over a bit so everybody can see it. Let's talk about accumulation and distribution so we can clear up some of this new stuff. Look, right here, before going too far back, this was accumulation, right? This was the low right here off a previous level, and I'm 100% sure that was a previous level, but I'm not going to do that right now. So this is a form of distribution, and the tail end of distribution off this move up, and this was accumulation based on a level previous, right? Delete some of these. So this coin moves up, right? Has a final target of distribution here for whatever reason, for going back into, what is this, January, just like Bitcoin, right? Distribution happens here, right? Comes all the way down here. Accumulation happens here. Coin moves up, has a target, distribution, coin moves down, has a target, coin moves up, and so on and so forth. So in this Ripple move, forgetting about this weekly chart. Come on, keep going back here. Let's now break it down to the daily. So on this daily chart, we created a swing low level here, okay? This was from January at this point in heavy accumulation. So accumulation is happening all right here, right? And even you can even call accumulation kind of this whole zone right here after this move down here. This move down happens here. It creates our low, right? And you can call this whole yellow box a form of accumulation with moves within it, right? So let's dissect this move a little further. Did news really cause this move to go up, right? We're going to talk about that in a minute. So this comes up here. Distribution happens, right? This is all distribution. As distribution is exhausting, accumulation is happening, right? So this move is in the tail end of its move. This here is important because this actually didn't touch our support. When this rejects that support touch right there, there's more buying presence in it. So this creates a new low for us, right? Right here. Put our magnet tool on, get this right on the wick, right? That's the wick there. Let's move further into this move, right? We can see that this was rejected. This is accumulation right here. This is when this coin, everybody is buying because distribution has exhausted. This was the start of that news article. What you guys have to realize is these companies, they plan these news releases in heavy accumulation periods so that the value of their asset goes as high as it possibly can. They will not release this news sometime mid here, right? Because this coin is in distribution. It has to go into long-term accumulation. And companies do this because they want the most asset value out of that coin, right? So you have to think about it. You have to put yourself in their shoes. When is the best time to release news? It's when a coin has been in heavy accumulation, because what's going to happen is everybody who's bought reduces the supply for the market. So it makes this move up more ferocious. So everybody out there who's trading the news and who is using all these signals, you can do that. It's not a strategy I use, and I would caution you against it, because if you're trading the news, you've bought too late. You know, if you're trading the news, right, you would have saw this news article release, and you would have bought here, right? This move happened instantly, right? That move happened when Ripple had that big news announcement about whatever the banking project they were working on, or the new cryptocurrency project they were working on. This move was already in, and you didn't buy here because you missed out, right? Instead, you bought here. So had you bought the level, you would have bought here, right? So ditch trading the news. You get late entries, and there's better ways to trade. Trading the news is not a strategy that's used. It's something people do. They follow the news and they chase the news, and most times, more than not, they're getting burned on bad entries. Yeah, the truth about news. Let's leave it at that. Don't be a news trader. You can't make a career in day trading out of trading the news. And if that strategy works for you and you want to continue it, by all means. But in my experience, I think it's not the right way to do things. Reading candles. There is a lot of material out there on reading candles and what it means for, you know, every individual candle. Whether it be a big wick like this, or kind of an indecision candle like this, like a doji candle, or a hammer, a shooting star, or whatnot. Reading candles, again, trading is about levels, support and resistance, trends, and accumulation and distribution. A lot of times I see people trading and they watch the candles like a hawk, and they're watching these candles religiously, and they are trying to trade in the minute every single second of the trade. That's not how we trade. That's not how professionals do it. They don't read the candles. There's a way to tell when moves are exhausting, when a move has exhausted itself, and candles will tell you that, but you don't want to be a trader based on candles. I want you to ditch the indicators. I want you to know the truth about news and not trade the news. And I don't want you to trade based on reading candles. Reading candles will not help you in your trades. It can help you exit a trade, but you already know where your exits and your entries are based on targets, right? So reading candles, you don't have to watch trades religiously and read the candles and say, oh, this is a spinning top, or whatever type of candle it is. That's what I don't want you to do. These three things in red is what you're not going to do. Ditching the indicators. Let's change the wording on that. Let's say using indicators. And then in brackets, I'm going to put for now, because we will use one or two indicators in the future, and I will go over them in great detail in a more advanced course. But using indicators for now, I don't want you to do. Trading the news, let's put it that way. Trading the news, I don't want you to do that. And I don't want you to be reading candles for trades. Those are the three things I don't want you to do. Next thing is having the right tools. And a lot of times I see, you know, I'm helping people out and they're new to trading, and they're using, you know, something like their exchange view, like OKX or Binance for trading view. I want you guys to use the right tools. You know, if you're going to build a house, you don't use bubble gums instead of nails. You know, if you're a framer, you're not gonna put together 2x4s or 2x6s to build a structural wall with bubble gum. You're going to use certain type of anchor nails or whatever, but you're going to use the right tools. And our tool in trading is trading software specific. For me, I use TradingView. I love it. It's my tool of choice. I have no affiliation with them, obviously, just my tool of choice. I use TradingView. Whatever you guys want to use it, but TradingView has free accounts, and it's used by a lot of people, and that's where you'll find my charts anyways. When I do them is on TradingView. So I would recommend TradingView, but you use whatever you want. I don't care what tool you use, as long as it's not an exchange view. I don't want to see, if you're going to send me a chart to look at, I won't look at Binance charts. I won't look at things like that. I want to see proper charts done on software, because that's what serious traders are going to do. And if you want to do this professionally, you would want to have professional tools. So something I can interact with. Like I said, I recommend TradingView, but I'll leave that up to you. The most important thing about trading is discipline. The last thing we're going to touch on, just in the fundamentals of this, and what I want you guys to absorb before we get into building you guys up and creating you guys as professional day traders, is discipline. Something I was very fortunate to learn in poker. When I played poker and bankroll management, I don't know how many times I lost thousands of dollars because I had poor bankroll management, and I couldn't control my emotions, and it took me a long time, many years of pain and emotional destruction, and just complete psychological torture of not respecting my bankroll and its limitations, and loading up thousands of dollars to play on a poker table, and then losing thousands of dollars and going through emotional torture, and having sleepless nights where I had nightmares and I couldn't sleep, and I had anxiety, and my heart would race, and just the emotional torture, the baggage, and the mental anchors that not having proper control over your finances gives you. And it's tough, because and I remember in poker, I would have $3,000 on my account, and proper bankroll management states that I need 100 buy-ins for whatever limit I'm playing. So with $3,000, I want to feel like an all-star. I want to trade big amounts of money, and I want to take 600 of that $3,000 and put it on a table, and then when I lose that $600 on one buy-in, I want to go and load up 1,200, which is the next half of that bankroll. So I only essentially have 3 buy-ins, and you lose it all, and it's emotional torture, and it goes fast. So discipline and controlling the losses in trading is the most important thing. We call it bankroll management, you call it account management. Discipline and humility and being humble about your account is important. Whether you're starting out with $100, or you're starting out with 5,000, or maybe 10,000, or 50,000, or 100,000, or 500,000, whatever your trade budget is, discipline and being able to control your losses and mitigate the risk behind trading. There's a kind of a nominal saying, and a well-known saying, and this is very universal in the trading world, is that if you have 10 trades, okay, and in those 10 trades, if 7 of them are losing trades and 3 of them are winning trades, so you have a 30% win ratio, you can make very good money that way. And the reason being is because those 7 trades, you limited the amount of risk to 1 or 2% of the trade. Whatever formula works for you, we will get into that later, again, in a more advanced course, but if you have 1% loss on 7 trades, but you've made 5% on 3 trades, you're negative 7% from the bad trades, plus 5% over 3 trades, which is plus 15%, which balances to plus 8% positive trades, profit over loss. So in 3 winning trades and 7 losing trades, sounds like a losing trade, sounds like a losing trader, but in reality, you're up 8% on those 10 trades. So there's a formula and a way to control your bankroll and ensure that you are going to be successful at trading and to limit those losses. But it can't happen without your own discipline. Take it from somebody, or maybe you have a similar experience like me. Take it from somebody who has gone through the emotional torture and years of anxiety and losing money in poker and trading, and embrace that suffering and be humble about it. And, tell the stories about how you lost money in trading. You always hear the stories about how people make all these great trades and make all this, oh, I made 20% on this trade because it went up, and, I took a chance and I made 20%. But you never hear guys talk about how, yeah, man, I took this trade and I didn't have my stop losses in place, and I licked off 15% of my account, and I felt terrible, and that cost me $5,000, and now I can't, pay for groceries this month, and because I wasn't disciplined enough to know the fundamentals, or apply the knowledge that I know, or have some type of control over my account. You don't hear those stories. You only hear the stories about how guys made home run trades, and it's like, no, there's a suffering in trading. There's a suffering, and you need to embrace that and learn discipline so you can control it, right? It's a great tool. That pain and that agony is a great tool, and when you control it, it can't hurt you. And when you have reduced risk and you mitigate those losses, it can't hurt you. It can't give you sleepless nights and anxiety, and it won't make you sit by charts. I remember nights when I would check my phone 20 times a night. I would wake up and I would look at my phone. I would sleep for half an hour and I'd look at my phone, my mobile, and I would look at my trade and see how it's doing. And sometimes I would rush, downstairs in my house, and I would do something to the trade, and it was agony. Just important lesson is discipline. Learn how to use it and put it in your corner as a tool, and it will treat you well, and it will help you mitigate risk. And it's one of the most important things about becoming a professional trader is constantly building your bankroll, but almost trying to get to a point where you never have losses, because as you get to a professional level, you will never have losses in trading. Not never, you'll have losses, but they'll be small, they'll be controlled. You'll lose 1% here and 1% there, and you might go 2 weeks of losing 1% here and 1% there, but then you'll snap out of it with 4 or 5 good trades, and all that loss will be offset by 1 good trade, and then you'll have 2 more to boost you up, and you'll feel great. So that's it for now, everybody. This was the course 1, the fundamentals, and it was mostly theory and talking, and something I wanted you guys to understand. Might be a little boring visually, but important nonetheless. Things I want you to keep in mind. And moving forward, we're going to start talking about the different nuances in trading, all the different tools and tactics that you're going to need to become a professional trader. And just going off the list, I'm just going to copy and paste something here real quick. So what are we going to do next? We're going to talk about accumulation and distribution in the next video. The video after that is going to be targets, and then levels of support and resistance, how to identify them properly. Momentum will be the video following, why patterns form and what do they mean. Wedges, rising and falling, also known as bear and bull flags. Trends, larger time frames versus smaller time frames, Fibonacci levels. And that'll be a bulk of the beginner's course, and then we'll get into medium, advanced, and some different things. But those are a few of the ideas that you have to look forward to soon to come. And stay tuned, and thanks for the audience for the first video, and we'll see you in the next one. Take care.